Good afternoon and welcome to the Fontanelle Final Bell here on the Rural Radio Network. I'm Susan Littlefield. We have got to focus on nothing, and nothing in the sense that there's not a lot going on in this market, but there's a lot going on in this market. And we're going to explain what exactly we're talking about. Non-threatening weather, that's the nothing part. The surprise, China's back in the market making waves, and how is that going to affect our markets? Is it going to have an effect? Is it just a quick little blip and we go back to normal? We're going to get all the details with the gentleman you see with me. Mike Zuzolo is joining us with Global Commodity Analytics. And I think, Mike, let's start with China and what has been happening with them with the proteins. I mean, just to bring our listeners and viewers up to speed, is they're banned poultry coming from an Arkansas plant in regards to COVID-19. We knew it had happened in Germany. And now you said you're also seeing them do it to other countries as well.
Yeah, and we're starting to see it not just in the protein sector, Susan, and thanks for having me on again. It's a real pleasure to be with you. We're also seeing it now in the soybean complex, and not only Brazil, but the latest word I have gotten as of Tuesday afternoon is the idea that China is going to require or ask all soybean importers, North American, South American, European, to come in and verify and kind of almost put a stamp of non-COVID in the soybean loads and cargoes. And so if they're doing it with soybeans, you can essentially know that they're going to do it with almost anything, because soybeans are so traded so heavily in China. If they want to do it with soybeans, they pretty much have to do it with everything else, because soybeans move so much throughout that country, it would seem to me. So I'm sitting here thinking to myself, okay, is this a trade barrier, or is this a real issue with the COVID spike in Beijing? And I think we can put that to the side right now and say it really doesn't matter why they're doing it. The fact that they're doing it really upsets the apple cart in terms of their demand potential, because one of the Brazilian soybean cargo experts essentially, and loadout experts essentially said, look, it's almost all automated, what we do at this stage. So it would be very unlikely for any soybeans to have COVID-19 in them. But how can we promise that at this stage? It's almost like, in his words, promising the impossible. And so it really begs the question whether China really needs soybeans, or whether they bought plenty ahead, or are they still having African swine fever issues, and therefore they don't need as much as the market is thinking. So I think the bottom line for me is that between them continuing to buy 2021 soybeans and also doing this now, their demand for soybeans is probably not going to be what the market expected.
It seems in some ways almost like it's an economic ploy. Things were finally getting back to somewhat of normal where they were making purchases, and then this pops up. And like you said, maybe it does have ties with Beijing, but the CDC, USDA, all those folks say that from a protein perspective, it's not transferable. So are we leaving the science behind?
I think we could. And I think even if we're not, the fact that they're buying so much 2021 soybeans from us leaves the door wide open, I would say, for them to cancel the shipments or sales and purchases of those soybeans if things don't go well with the Trump administration heading into the election. You and I talked about this last time we were on together, and the idea and the research that I put forth to clients and subscribers was it's going to be very hard for the U.S. government to probably see the Chinese play very nice going into the election, because they probably don't want President Trump as the president and serving a second term because of his trade and economic and foreign policy hostility as they see it. And we see this again with Peter Navarro, his key trade representative, other than Robert Lighthizer, coming on Fox News on Monday night, saying that he essentially said yes, the U.S.-China Phase 1 trade deal was over, in his words, over, and that it was essentially economic warfare at this stage that we're having to wage on China to get them to bend to our needs and our policies. But then President Trump came out right away and said, no, it's still on, it's still on. So I think it just really, really makes it very shaky ground for the soybeans to be able to go higher without the wheat and the corn joining it, especially if we get these much needed rains in the areas that haven't already gotten some rains this week.
Well, it's definitely going to make for some interesting marketing times from producers that were kind of banking on this whole Phase 1 trade deal to be able to move forward and get back to some normalcy.
Yes, and you notice also the funds haven't really taken that into consideration at this point, other than keeping the beans hemmed in at that 880 area for the new crop futures. And I say that because we finished out Tuesday's trade with the new crop beans against the new crop corn, hitting that 2.6 ratio, dividing the beans into the corn. And so you're up at contract highs again. With the beans favored as the long side of the spread, the corn the short side of the spread. When is that going to change? Is the acreage and stocks report next a week from Tuesday, is it finally going to make the market break? If bean acres go up and they realize that we have a comfortable supply and the demand is not going to show up as much in 2019, and USDA is going to therefore have to cut exports again. So you're right. That's where I'm leaning at this point. Is if you ask me, it's profitable to hedge beans, not a lot, but it's at least profitable to hedge beans here. And so I don't want to let these prices slip away. If wheat and corn would turn around and go higher, then I'd be more patient about locking in too many beans at this stage for new crop. But if it's raining and the corn and wheat want to take a new leg down, I don't think the beans are going to fight that.
And we shouldn't be surprised that all this is being factored in leading up to a November election.
Yeah, exactly. And that's where it goes. It's the election in terms of, where our country is headed in a multiple faceted area, whether it's trade, domestic, foreign policy, economic situation, post-COVID. It doesn't matter what you look at. I can't remember a time in history, except maybe after World War I with the pandemic back then, where we were heading in such a direction where so much mattered and so much was riding on it. But China is kind of the new Soviet Union now when it comes to the hegemon out there and the country that wants to kind of rule and take over be the king of the hill again. And the only thing stopping them right now is the US dollar and us being still the reserve currency in the world. And so that's something that we have to look at in the long term.
All right, well, stick around, folks. We've got more coming up. It's the Fontanelle Final Bell on the Rural Radio Network. Welcome back to the Fontanelle Final Bell here on the Rural Radio Network. I'm Susan Littlefield as we continue the conversation with Mike Zuzolo. And at the start of this, I talked about really not a lot of nothing going on. I mean, we saw some lower numbers in the corn and the beans today. Not a lot of reaction, not a lot of real surprises, I don't think, from last night's crop progress report.
No, I mean, the corn certainly was the weaker of the suit of cards out there because of the improvement, which I really question based upon the Nebraska producers and ranchers I work with. Very few before Monday night's crop report were saying their crop was better. Some are actually saying it could be as bad as 2012. And even with, irrigation being able to be used and being able to turn the pivots on, there are a lot of producers that are really needing some rains in Nebraska. So to see that go higher in conditions makes me really wonder. But Susan, you can see it's one of those years right now where Iowa and Minnesota are really in the focal point, and they're in the crosshairs when it comes to the trade. And as long as they see them get plenty of rain and plenty of big acres, and that's a biggie right there, is do Iowa and Minnesota acreage numbers match up in this June report compared to March, or did we trim some of those acres because of the wet, cold weather? And I think that's something I'll be looking at. But yeah, the crop conditions, in my opinion, are essentially out or are kind of off the table in terms of motivating the long position holder or motivating the funds who are short to get out of their short corn positions.
Crush margins, what have you thought? Not a lot happening there either.
No, you can kind of tell we still have an ample number of hogs, but it's not so burdensome that the meal crushers are really bidding up right now. And you can see also that old crop supply is pretty big. And so they're getting plenty of beans, and it makes sense because the beans are the ones to sell because they're the closest to being profitable right now. Crush margins could improve in the July-August time period if we had some issues with pod fill. That's where they probably bid up because they'd be running a little bit thin, and they know that South America is essentially out of beans anyway. So that's probably the area. If we don't go higher in soybeans, with my mindset, again, led by wheat and corn, I'd probably sit back and wait for the July-August time period, maybe try and find a low there to buy back into.
Looking at the numbers as we switch gears and head over to the livestock, cold storage report. Do we see anything exciting going on?
Yeah, it really, in my opinion, Susan, kind of put the low in the markets because we were coming off the negative cattle on feed report. We're getting our weekly kill back up. I put out a video on Twitter earlier this week about how the retail grocery store prices for beef and pork and chicken are really starting to hurt the summer demand. And I really think they are anecdotally. I don't know if we can see that yet in retail sales, but I'm really concerned about that heading into July 4th holiday and the grilling season. We're certainly feeling it here in our pocketbook in Atchison with what we're buying right now. Thankfully, I've got a couple clients that were able to get some pork and beef to me before all this hit, and I've got a good freezer full of red meat. But I think the key with this week's trade has been this cold storage report showing that record drop in pork stocks. That was very, very much needed medicine for the long position holder and for the cash market especially. And so we've got a bottom in the market. Can we hold that bottom as we head into the hogs and pigs report on Thursday? Two numbers to watch out for. I was shocked because these are the Reuters estimates. All hogs and pigs June 1, very wide estimates from 102 to 105. Kept for breeding 97 to almost 99. And then kept for marketings 102.5 to about 106. I would be wondering if we could really see a 105 all hogs and pigs. That's the top end of the number range. If we saw 105, that'd be pretty negative for the front end markets, and it probably would not give us a lot of upside potential. But if we came in on the right side of these estimates, I think you may be looking at that low that I've been waiting for in the hogs as we've tested that $45, $46 range again, and so far held that.
So looking at those numbers, how do you expect the hogs to trade tomorrow leading into this Thursday report?
Yeah, I think if the cattle and the feeders, which look like they stimulated buy signals on their daily charts, if they did do that, I think the hogs will follow with a little bit additional short covering. This is one of those reports where the funds probably who are short will think to themselves, well, I'll buy it back here. And if the report's that negative, I can always jump back in and get right back into that position I was already in a couple days ago. They oftentimes will do that in the corn. And as I've seen here in the last 6 or 7 months, there's quite a bit of similarities between the way the funds trade the corn and the way they trade the hogs. If relief rallies fail, they jump back in on the short side very, very quickly, typically.
A lot of things to look at, especially on this livestock. We've missed two major holidays, Mother's Day and Father's Day. 4th of July will hopefully, but mostly that's just hot dogs. We don't see a lot of steak grilling going on. So things that we need to factor in as we market. What's the best way for folks to get a hold of you and find out more about the newsletter that you had talked about earlier?
Yeah, the best way is to go to globalanalytics.biz and sign up for a free trial, and that'll set you up for all the analysis except for the text blasts that I send out to my clients and subscribers. If you need to talk on the phone, call me toll free 866-471-2588.
All right, thanks so much. Mike Zuzolo has been joining us today. Just a reminder, commodity futures and options do involve substantial risk of loss, are not suitable for all investors. That is the Fontanelle Final Bell being brought to you by Fontanelle Hybrids and all your local Fontanelle dealers. You can check this out as a podcast at ruralradio.com, wherever you subscribe, and on Spotify as well. It's the Fontanelle Final Bell on the Rural Radio Network.